So thank you all for joining me today. My name's Tim Travis, and you are watching the first episode of the Dynamic Investing Podcast with Tim Travis. And we're going to cover a lot of different things throughout the course of this show. We're going to talk about investing, specific investment opportunities. We're going to talk about, financial planning. We're going to talk about market circumstances. We're going to be interviewing professionals, experts, and learning kind of what makes them tick and what's made them successful over the years. And the idea of this is really to provide education. So want it to be entertaining, want it to educate you and help you understand, how to become a better investor, how to make better decisions with your money. It's so critical. You so much stress, so many divorces uh, are really the result of bad financial management, and just being aware, being educated can increase the quality of your life by a lot. And so that's what we're going to kind of get into. So wanted to give you a brief introduction as to me. So I'm the founder and chief executive officer of TNT Capital Management. We're a registered investment advisory firm based out of Orange County, California. So I've been in the industry over 20 years now, and really became a passionate investor at a young age. I remember it was in high school, and I was going on a trip to Hawaii with my dad, and he wanted me to have kind of a book to you know go spend some time with when we're in the pool or at the beach. And so he gave me The Intelligent Investor, and that's a book that's written by Benjamin Graham. Warren Buffett said it was the best investment book and that he's ever read. So that was good enough for me. And what I really liked about this book was that it made investing make sense. So previously I had seen, newspapers back then. So you see the quotes or you see the tickers on TV, and what's driving that? What's driving the change in prices? What does it even mean? When I'm buying a stock, what is it, right? So just a few of the basic examples, and what the book did was it gave a framework for understanding, investments. And so basically, stocks are simply fractional shares of a business. Every business or stock has an intrinsic value. To ascertain the intrinsic value, you want to look at different qualitative and quantitative metrics. What's the balance sheet? What do the cash flows look like? What are the margins? These various factors indicate price. And then, because every business has a value, there's often times when the stock prices fluctuate in excess of the business value to where they're worth a lot more than the actual business underlying it. And there's times when the stock is way too cheap, and maybe you could liquidate for the company for double what it's trading at on the stock market. So that made a lot of sense to me. And so it was exciting because I get it. I got it, and then there's also the psychological elements of investing. So, there's that person that, you know, always wants to invest in kind of the glamour type stock. And then there's the person that's more contrarian by nature. And if everyone hates it, well, that might be where there's opportunity. And both approaches can be successful. Historically, value investing has tended to be more contrarian, and value investing has the best track record of any other type of investment strategy that I'm aware of. But of course, past performance is not indicative of future results. Anything can happen. All those disclaimers. But so that's a little introduction. So went to college, UC Santa Barbara, BA in business and economics. And when I was there, I worked at some jobs. AG Edwards and Sons, which was then bought by Wells Fargo. Worked at Scottrade. And then when I graduated college, I worked at the big mutual fund Dynamo Vanguard out in Scottsdale, Arizona. And so I learned a little bit about that industry, and I stayed in it. I worked at multiple companies after that, both large and small, and I picked up a lot. And and what I really found that kind of disillusioned me was that a lot of the firm's investment styles and philosophy were not how I would invest my own money. A lot of them are way too cookie cutter. And so that turned me off. It's one thing to have an idea. Okay, well, historically we've done 60-40 stocks bonds for someone that's 40 years old. That's to give you an idea. But what if interest rates are so low as they were after the financial crisis, where the risk reward for bonds was terrible, and so you're seeing that come to play. The long-term treasury bond TLT, that's down over 50% as I'm recording this. So you had the upside potential of maybe a couple percent a year in income if you're lucky, and the downside is over 50%. I mean, that's a terrible risk reward, but many, many, if not the vast majority of firms, that's what they do. It's cookie cutter. The financial advisor's job is, for them, it's just recruiting assets, getting assets into the firm. It's not, okay, let's maximize the assets that you have and make them grow. Let's protect them in the best way. And that entails a lot. And there's a lot of reasons why they don't do it. So that's a little bit of background. And about 13 years ago, I started TNT Capital Management, and we've been growing ever since. And we provide comprehensive financial advice and investment management. We've recently added insurance capabilities to our repertoire. And so that's what we do. And so we work with clients all over the country to help build portfolios and provide them the retirement and life that they deserve for working their tails off. So that's just a little bit of a background about me. Now, in this podcast, I'm fortunate to have been doing this a long time, and I have a lot of friends, whether they're CEOs of companies that are publicly traded, or their clients that are running some of these companies, both public and private. There are other experts in the field, financial advisors, insurance experts, financial planners, all of that. And that's what I want to bring into this. And we'll have some interviews. We'll do some things to just, enhance the education further. And then we'll talk specifics a lot, and hopefully be able to take some questions and things like that as well. So thank you. I'll keep this short, but looking forward to getting started on this, and hope to see you at the next one.